What's going on, everyone? Wanted to make a video on how and why supply and demand imbalances are so powerful in trading. I feel like a lot of traders are going to relate to this video. It's filled with good insight, and we're going to do a little reverse psychology on the market and talk about how to be successful because of other traders. So keep an open mind with this market. If you are new here, make sure to hit that subscribe button, and also be sure to follow me on Instagram. It's a very good resource where I post daily trading recaps along with very good trading tips and tricks. The link to this will be in the description below. And this is going to lead us exactly into our first point. If I pull this up here. So think about like this. I posted this a little while ago. If 90% of retail traders fail, why do the same thing that the 90% do? So I don't know the audience on how successful you are in trading. Whether you're watching this video, you have some success. Whether you're not seeing any success, there's other traders with different strategies. But you have to keep an open mind and understand what 90% of retail traders do, because 90% of them do fail. If everyone's doing it and everyone's seeing more failure than success, why follow them? Why follow what they do? Why take the same trades? If they're failing, you're going to fail just as well. You have to trade differently. You have to do with others what others don't do, and that's when you're going to see the greatest success. Don't follow the crowd, don't follow the herd, because majority of traders are wrong and majority of traders fail. So think outside of the box, trade a little differently, and you have to think a little differently as well. So let me pull up this Google Docs right here, and I basically formed this little sheet about what do 90% of traders do. And the first thing that came to my mind is 90% of retail traders are too monolithic. They rely too heavily on monolithic technical analysis. And what I mean by this is they find technical analysis being uniform. They find it being, indivisible. It's this greatest power that once I see, X meets Y, I'm going to take the trade. It's a one size fit all. Technical analysis is so 1980s, 1990s. I still use it myself. It's part of my trading strategy. However, it's not a one size fits all. Every trendline break isn't going to go to the downside or to the upside. Every high a day break isn't going to send the stock flying up, or every low a day break isn't going to send the stock, flying down. So it's very important for you to use context with this, because not one size fits all for every trade. You have to focus on market context with these trigger points. It's something I stress to members in my Discord community. It's what I talk about in the course. Market context is key, because trading is not monolithic. It's not a standing stone. It's not something that's uniform. Every day is different. So a high a day break, today might be different from a high a day break. Let's talk about, yesterday. For example, I pulled up a chart on QQQ a little while back, and this is where, 90% of retail traders do. How many of you buy high day breaks, low day breaks? I'm not going to bash it, because sometimes they work, sometimes they form to price imbalances, and I'll take the trade. However, if everybody could do it, and it's so easy for other people, it's so accessible, and it's so easy to understand that you open up a technical analysis book that you learn from, and I'm guarantee it's in there. So the market sold off, and then we start coming up. But if you don't use market context with this, and majority of traders will buy a high a day break because it's the highest point of the day. You have buyers that were long up here, and you have shorts that are now short up here as well, will now be underwater. Price is going to continue going higher. We have volume coming in. However, once you use context and you understand supply and demand, you understand price imbalances. So essentially what this is supply and balance. You're going to have no real reason to take the market long above high a day. Same thing to the downside. If we had a demand zone over here, price broke the low. If I pull up the 5-minute chart, so now we have a low that's put in. We come back into the trading range on the S&P 500. Whether you trade SPY, SPX, options, doesn't matter. This is the S&P. It's the most liquid market in the world. We come back into the trading range. Now we have a high that gets put in. We also have a little bit of a falling wedge or a rising wedge, where we're consistently making higher highs, consistently making lower lows. However, the rule of thumb in standard technical analysis is you buy the move once we break the lower trend line in hopes that the market is going to continue going down. However, once you put context into the market and we have a demand imbalance down here, meaning we're looking to take the market long, either A, it's going to prevent me from taking the market short on a trend line break due to my risk to reward being very slim compared to the demand imbalance that we have down here, and the fact that we did break the low a day around 4108 for about another 3-4 ticks to the downside, we come into this demand zone and we bounce right away. So everybody that is short here is providing liquidity for traders that are trying to go long, hence the confirmation of a demand imbalance, and then we get a strong move to the upside. Same thing with QQQ. We break above high a day in a supply zone. The idea here is to take the market short because this is an origin of price where supply was exceeding demand at one point in the past. Now we wait for price to retest the zone. We break high a day. You have a lot of traders thinking that this thing is going to rip to the upside. We have a V reversal right inside of supply. Then the market sells off, pulls back right into VWAP. However, a 2-point move and we start bouncing at VWAP would have been a good enough confirmation to cover. And then we do start rallying. However, the first test of the zone provided liquidity for the sell imbalance to get filled, hence a quick move and a quick drop to the downside. So don't treat technical analysis like a statue. You can't trade like a statue either. You have to use context with the market. High a day, low a day breaks will work. But let me know in the comments below how many people get faked out on these type of things. If everybody knows how to do it, the success rate of it working is going to be much slimmer. So every single book, every single trader uses standard technical analysis, and you have to think outside of the box. You have to form something a little different to it. Also, a lot of traders don't understand how the market moves. They don't understand how the market facilitates trade, and that's supply and demand. It's what I stress, it's what I teach in the course, and it's with any market, not even the stock market. It could be a car market, a real estate market. Price will move up because demand exceeds supply, and price will move down because supply exceeds demand. Once you add price imbalances to the market, where we have an area or an origin where this equation was out of equilibrium, you'll figure out that we wait for the market to retest that area, we add technical analysis to it, we add market context to it, and we could take high probability trades. So every day in the chat room, I post pre-market plans of the demand and supply imbalances that I'm watching. And throughout the day, I update everybody in there of my commentary of what I'm watching, my thought process, and market context as well, because that's what I feel like a lot of new traders will understand and pick up on and learn from themselves. So the plan on Monday for Facebook was we were trading 311 in pre-market. Very strong move. We had demand at 308.84 and 306.40 that I would like price to pull back into and get long. So this will go into our next point, which is when you are buying, someone has to sell. In the market, for every buyer, there's a seller, and for every seller, there's a buyer. There's no such thing as more buyers than sellers. There's no such thing as more sellers than buyers. There could be more aggressive buyers than sellers, and there could be more aggressive sellers than buyers. However, price will move up once there's more buying, aggressive buying, and price will move down when there's more aggressive selling. So what this comes into context is you have to understand who is your competition. When you're buying, someone's selling. Who is showing effort in this case? Are bulls showing effort if you're trying to go long? If they are, ride the trend. If you're trying to be bullish and bulls are not showing up and sellers are continuing putting pressure on those buyers, then the buyers aren't getting rewarded, and you could look at this case that sellers are. So there's tons of different context that has to go through your head on a blink of a second, and you have to be able to make a trade, get your order ready to go. You have to be able to put risk on the table without even thinking. That's why I always stress less thinking is more thinking, and I try to provide this commentary throughout the day through to members. However, going back to Facebook, we did have a sell-off. If you look at a little bit of a bigger picture, yesterday the market did sell off from the highs, now gapping down slightly pre-market, and we saw some pretty heavy selling pressure from this volume over here at the open. However, once you put context into the market, there's zero reason it's going to prevent you from going short the market because we have demand. And in fact, once we get confirmation, we could take the market long. We had this strong move, nice volume inside of demand from the pre-market plan. Then price started rallying from the zone, was kind of choppy. However, if we did get long, no reason to panic, because if buyers were priced into the market, let's just say right here, they are getting rewarded and sellers are not really putting pressure to those buyers. Then by end of day, we get that nice rally and a nice close. Not a crazy move. However, demand proved to be stronger in this case. And if you were long around 308.50, 308, you could have got a nice 4-point rally to the upside. And if we add VWAP to this chart, I think we came up to VWAP, right here before rejecting. So this is a big one because when traders first begin, they think indicators are some magic formula. There's a holy grail that's going to win 100% of the time. I'm going to buy when the MACD, the RSI is overbought, oversold. I could tell you as a guarantee, indicators do not move the market. In fact, they are just noise to your trading. They add confusion to your charts. Same thing with news. News is just an agenda to push liquidity into the market. The best trading setups, the ones that I see, and the best news articles come out when price is in demand, and the worst news articles that affect price to the downside usually come out inside of supply. You have to ask yourself, why is that? The market needs your liquidity. Act like you are little fish swimming in the water, and big traders that have fat pockets that can move the market, basically are the fishermen, and they're just waiting for us to bite on their bait. For example, this post I posted a little while back. Big market players with big money, you break below support. Who's buying below support? Majority of retail traders, the fish in this case, are shorting the market down here. Big buyers, baits in the water, they're looking to buy. 80% of the time, we're inside of a demand zone, and guess what happens? We have a strong move to the upside. We reverse. Smart traders, the big market players, need retail liquidity in order for their orders to get filled. You have to understand that the market moves from balance to imbalance. Smart money will always win. They need us. So what do? Because they need us, they know how we trade. They know what we do. They know where we buy. And when we're buying, they're selling. When we're selling, they're buying. So balance to imbalance, same exact case on Facebook. The market looked super bearish. We broke below the low. And yeah, you could have scalped a couple points to the downside. Could have been a great trade. We did also break this wedge. So that could have been a very good short. However, my risk to reward, if I add context and I add supply and demand to the equation, just add this zone. These are manually drawn zones. There's no indicator for this. Price sells off. Volume is coming in. So when I see volume coming in, that's telling me either retail shorts are selling the market all the way down here, and smart money is buying their shorts. They're adding liquidity to the market, and then we get that reversal. Or it's telling me longs up here are stopping out. When they stop out over here, it's also providing liquidity for fat pocket players to get filled their orders, and then we get that nice reversal to the upside. So you have to understand that, and you also have to understand yourself. This is very big. A lot of traders get into the market. They think they're going to swing for the ball, hit a home run. They're going to make $1 million tomorrow. Trading is a process. You have to understand yourself a lot. You have to understand your emotions. You have to understand how you feel. You have to test certain things. You have to see what works for you depending on your personality. You have to understand yourself as a trader, and that's when you're going to see success. Believe me, I've been trading for a while now, and all of these things are key points. Don't put yourself what the majority is doing. Think outside of the box. Think differently, and you have to think a little critically as well, and you have to be smart about it. So I hope this video helped. Be sure to drop a like, subscribe to my channel if you did learn something. If you want to learn more, supply and demand is the basis to my trading strategy. Click the link in the bio. I do offer a very in-depth course, which comes with access to the chat room at no charge. But besides that, I'm going to end it here. Smash that like button, and I'll see you all soon. Peace.